Hello everybody. So this video is entitled Comparing Top AI Stocks, and I only have 10 minutes, maybe less than 10 minutes to cover a few stocks that I want to discuss. Now, of course, my methodology, it is what it is, but I apply the same methodology to every stock. And so the goal of this video is not to do a deep dive on any stock, but it's just to figure out comparatively which stock is cheaper, which stock in AI is cheaper than the others. And so we're going to get to that in a second. Of course, what prompted this video was listening to some parts of the call, of the Amazon call, and the fact, there's a quote that Andy Jassy says in the Amazon call that says that they even have crazy demand for AWS for 2028. So we're talking about a year and a half from now. We're still seeing enormous demand trends. So AI is real. AI is not a bubble, and it seems like we can't get enough of AI hardware, AI data centers, etc. The demand for intelligence has no bounds, apparently. It's what it seems if you listen to that Amazon call, and of course the reaction of Amazon stock price up 15%. So let's just begin with looking at comparative valuation of the Mag 7 stocks. So I had two Mag 7 stocks in there, NVIDIA and Amazon. As you know, NVIDIA, $200. I consider NVIDIA to be way too cheap. If you look at NVIDIA hasn't moved very much in terms of stock price in like 8 months or something like that. I consider it way too cheap at 200 on enterprise value over gross profit over revenue growth, which is my metric on this channel. Which is a modification of a PEG ratio, but I use gross profit instead of using earnings, because I think gross profits is more indicative of the money that's going to go into investment, right? Anything after the gross profit line, all of your capex, that's going to be an investment. I look at this as a good thing. I don't look at this as a bad thing. That's why I use gross profit and not necessarily earnings. When I look at NVIDIA trading at 0.41, that is the second cheapest out of all of the Mag 7 that I cover. Amazon is actually the third cheapest at a 0.54. Amazon is, kind of right in the middle, not cheap, but not expensive. I don't have Microsoft in there, but Microsoft, if you look at the spreadsheet, it's almost a 1. So Microsoft is actually quite expensive relative to Amazon. NVIDIA is cheap. NVIDIA is cheaper than Amazon. And if I look at the cheapest Mag 7, especially after the big drop, that's Meta. Meta is the cheapest by Mag 7. It's cheaper, 20% cheaper than NVIDIA. I like Meta quite a bit, and Meta, by the way, is on its way to becoming a hyperscaler. As Zuckerberg said, they are open to potentially selling all of their compute, selling their capacity. So the Mag 7, at least these three are pretty darn cheap. Google doesn't look so cheap. Microsoft doesn't look so cheap. Of course, Tesla doesn't look cheap on any metric if you value it. But if you look at, and Apple doesn't look cheap. But if you look at NVIDIA, Amazon, Meta, relative to the other Mag 7, I find these to be quite cheap. But let's get to the meat of the video, which are the AI hardware stocks. Of course, they bounced back on Friday. They could very much bounce back today, as it seems like a lot of the sell-off of last week was entirely manufactured because a major AI fund needed to be wiped out by a bigger Wall Street player, if you followed that saga. So it seems like the manipulation last week knew no bounds, and this drop in AI was more done to liquidate somebody than it was done, to actually mean that the stocks are not going to do well. I believe that many of these stocks are going to do extremely well. So let me just briefly comment on all of them. Again, this is relative valuation, which is cheap, which is not cheap. I'm not going into the details of what these companies do, just relatively the price. We're just looking at the price. This is kind of a, dumber analysis, just looking at the price. But first of all, we have AMD. AMD I've always found expensive. I don't understand why AMD is so expensive. AMD is more than twice as expensive as NVIDIA. Why would you buy AMD if NVIDIA is twice as cheap as AMD? I understand that they have something going on with CPUs, etc. But to me, I find that it ran too much. It ran too hard, ran too fast, and to me, it needs to come back down. Now, moving on to SMCI. SMCI is, of course, the stock that nobody wants to own because of quote-unquote China ties and, I don't know, smuggling GPUs or anything like that. There's a lot of drama around this stock. That's why it's so cheap. But the truth is that 0.22 in the hardware space, it's tough to find cheaper than that, except there is cheaper than that, and that is Micron. Micron is unbelievably cheap at a 0.12. It makes absolutely no sense. Micron is pretty much trading at a PE of like 4.5 to 5 price to earnings ratio, 4 price to earnings ratio. It's entirely ridiculous. Memory could very well be one of the cornerstones of AI, along with GPUs, as AIs, as LLMs need to remember, need to process memory, need to process requests. It could be that memory, the memory component of the AI brain, it could be that component is as important as the compute component, as the GPU component. And if that were to be the case, you could see Micron be a multi-trillion-dollar company. To me, Micron at 800 is too cheap. The big debate, what Wall Street wants to believe, is that it's still a cyclical business. But is it still a cyclical business for Micron? I'm not so sure, because if you listen to the call of Micron, they signed something like 17 5-year long-term contracts with upfront payments and all sorts of fees if there were to be cancellations, etc. They sign long-term contracts now at Micron. It's if you look at Apple, the way they had to raise their prices for memory, it seems like memory is not going to be a commodity anymore. It seems like it's going to be a cornerstone of AI. And so if memory becomes as important as the GPU, I see no reason why Micron's valuation couldn't get something close to NVIDIA at one point. At least that's my take. The jury is still out on that, and of course, the issue is Wall Street is very much adamant about the fact that Micron is still a cyclical company. Micron is still a cyclical company, and we might be hearing that for a long time. But when I see the PE on Micron, I'm not so sure. It's $820. I find it too cheap. I can't believe it dropped this much. Well, I can't believe it. It dropped this much because somebody needed to be liquidated. That's why it dropped this much. But my guess is that the bounce back will continue, and that's maybe unfortunate, because I know a lot of people were eyeing Micron at 600. I definitely wanted it at 600-700. We'll see where that goes. But Micron's too cheap. The problem is that it has run quite a bit. Okay, let's talk about Broadcom. So Broadcom, of course, CEO Okta, known for very, very good management. Broadcom has a very good reputation. It's known for having good management. They grew by acquisitions. They have a lot of good things going on. They have the A6 king, right? They make custom chips for so many different players. The problem for me is that it's so easy to eliminate. Broadcom, it's a 0.66. It's too expensive. It's like AMD, a little cheaper than AMD, but too expensive for me. It's easy for me to eliminate it. Then we have TSMC. So TSMC is actually not that expensive. TSMC is perhaps the company that, quote unquote, will win no matter what, because the manufacturing of these chips goes through to TSMC, right? TSMC is the biggest foundry. With TSMC, you don't have to pick a winner. TSMC will manufacture the chips for whoever ends up winning the AI race. But I also think that's the reason why relatively, for example, TSMC is more expensive than a Micron, less expensive than an NVIDIA. TSMC, to me, it doesn't get me excited too much, because I don't think it grows too fast. 33% revenue growth next 12 months is not fast enough in the era of AI. I feel like we can get an easy 100% on Micron. Even NVIDIA, I think NVIDIA is going to grow much faster than what it does. I like to see a doubling of revenues in a year in an AI stock. And of course, TSMC can't do that, because TSMC is fabs. They make fabs. They operate in the physical world, right? They actually manufacture stuff. And so you have to move at the pace of atoms, not the pace of bits. And as a result of that, I don't think TSMC can grow fast enough. You may have seen the quote of even Elon Musk saying, "Oh, we have to build our own fab because TSMC can't build them fast enough." I think TSMC, as far as growth goes, could be limited by the physical world, which is not necessarily something you see with a fabless company like an NVIDIA. And NVIDIA doesn't have a fab. And NVIDIA just designs the chips. They design the chips and they have somebody else manufacture it for them. So you're operating in the world of 1 and 0 when you're NVIDIA, right? When you're TSMC, you operate in the world of brick and mortar, and of course you are growing slower because of that. So that's one of the reasons why I would eliminate TSMC out of the list. And then of course we have Nebius. So Nebius, I've covered Nebius on this channel as soon as it went public. This was one of the earlier stocks that I cover on the channel. Now it's crazy to believe because it's nearly 2 years ago, right? Something like that. But you know, I loved Nebius very much when it was, you know, 25, 50. I liked it very much. Then it bounced right back. It seems like it might break 200 again. I don't like it as much as 200. But last week, when it dropped near 150, I liked it very much at 150. The moral of the story for Nebius is that it's still very cheap at a 0.12. Last week it dropped to a 0.12. Right now 0.16. Still very cheap at a 0.16. That's what I wanted to say here. Nebius has major contracts with Microsoft, contracts with Facebook, you know, multi-billion-dollar, tens of billions of dollars of backlog. These companies will pay, they will purchase the compute from Nebius. So the Nebius story of revenue is here. Revenue is coming. Revenue growth is coming, and it's coming, and it's going to be very, very high. For Nebius, I think the market, of course, could be wary of some of the debt that they will have to take on. That was another issue with CRWV. CRWV, of course, has a little more debt. You got to invest. The market has to be comfortable with CapEx. But if you look at what Amazon, I mean, if Amazon is to be believed, they announced an increase in CapEx and the stock went up anyway. So the market has to realize what's the value of those GPUs going to be? What's the value of a GPUs going to be? Are GPUs actually going up in value? I think that could be a thesis. I admit that observation a while back that actually tokens were going up in value. Like, they were not going down. The demand was even higher. So we'll see how that goes. But at a 0.16, I find it cheap. I like it better at a 0.12, but under $200, this may look like a steal a few years from now. Under $200. Of course, Nebius is a Neocloud. You know, it's a pure play GPU data center cloud play. That's what differentiates a Nebius or a CRWV from, say, an Amazon, which is a much more established company, much more established customers. Nebius really focuses on GPUs, and the same is for CRWV, right? CRWV is more for, I don't want to say it like that, but perhaps more of a bare metal offering. Nebius has a lot of stack offerings and software offering on top of what they say. CRWV may be more of a bare metal offering. But even though they also have some software solutions, but CRWV is more expensive, slightly more expensive. Although you can see the valuation is a little bit in line between those three. You have Nebius, CRWV, and then there's a third one. There's IREN. I don't have IREN in there because it's a Bitcoin miner, and the calculation gets messed up. Right, the calculation gets quite messed up. So I don't have IREN in there. But of course, there's a lot of people who absolutely love IREN. What I don't like about IREN is how concentrated their data centers are. It's all in Texas. I don't like that concentration as much. But you know, in my view, Nebius is my favorite pick of the Neoclouds. Right now, when it comes to the actual hardware makers, I like NVDA. And I like Micron, and I especially like Micron. Hopefully, it stays this cheap and doesn't bounce right back to 1,000. But I fear it will bounce right back to 1,000. I don't know why. I have this feeling. So this is like I said, not a deep dive. This is a comparative analysis. Feel free to pick from my numbers and see which one you like. Tell me which one you like in the comments. I am still traveling, hence I cannot do as polished of videos right now because of travel. This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.